Hey, welcome back, everybody. This is Sal with Simply Investing. We're back with another stock pick video. Great pick here. We got Dollar General, a lot of great things to look at, but also some worrying things, as you guys know. We also have our live every morning, so check out that as well. And if you could, guys, hit that like and subscribe button as we go over this topic. We really appreciate it. So here we got Dollar General. It is looking like it's going to be a pretty good long-term pick. I might be adding this to my portfolio, FYI. But looking at it over the last year, 10 you seem to be on the rebound. As you guys know, they're in a little bit of a dispute with a price discrepancy lawsuit. So we're going to go over that details in a little bit. But let's take a look at where they were on their earnings, because as you can see here on the earnings, they've always remained positive. Even with the rapid inflation and with people buying less, they're still making a pretty good profit. Now, a lot to I attribute that to changing the dynamic of the dynamic of the dollar store. They're not just doing dollar stores; they're doing what they're calling the Dollar General Marketplace, which is an excellent idea to kind of fill in where Walmarts have left. And that's where they're going, out into the southern states, out into those areas where Walmart opened and then closed, leaving kind of a food desert, and they're taking advantage of that. Now, as for their pricing, they're running into a tricky thing with the pricing because, as you can see here, we're going to go over, there is an active lawsuit being pursued in the courts, a class action lawsuit in regards to mispricing on items. Now, what this really means is that what they were doing was like, let's just say milk was like $4, and then it would ring up as $5. Now, 90% of people don't see it, but the gaps became so egregious that people started reporting on it. Now, there's two things that could attribute to this. One, this was a a planned thing, which would be very bad on Dollar General's part. And that would definitely, it wouldn't hurt the long term projection of the company, but short term, it would definitely bring the stock down to a discount value. The second thing is that they operate very understaffed. You're talking manager, assistant manager, one or two associates. That's it in a Dollar General. You're talking like four people. So yeah, and they have a lot of tags. They have like over 30,000 SKUs alone in that. I think it's more like 60 or 70,000 SKUs. For four people, that's a lot of tag changing every day, every week, every month. So I get why this more and more price discrepancies are falling through as they get busier and busier and busier, and things change so fast that the four people in the store can't keep up. Now there are some stores that have better staffing and things like that, but most Dollar Generals, and I know because I actually interviewed back in the day to be a district manager for Dollar General, and that was the vibe I got. Like you had like the store manager, assistant manager, associate. They had to unload the trucks together, put away stock together, manage the inventory, manage the prices, and do a lot, and take care of customers and everything. Unfortunately, with having a skeleton crew, price discrepancies are going to happen. So I think it's more of the line that price discrepancies are happening because they're understaffed and they're not properly staffed to handle the volume of tasks that are necessarily done. And making sure everything's priced right is something nobody wants to do. Because I remember when I worked at Radio Shack, I had to come in an extra hour early every day to make sure I printed all the price changes and then put out all the price changes. Which, if you stayed on top of it, it wasn't too bad. But if you let it go, you could end up having like 3,000 tags to change, which would take hours to do. And sometimes you just can't do that while you're trying to field customers. And Radio Shack was nowhere near as busy as a Dollar General. So I can only imagine, you change one tag and you got to walk up front, talk, ring out the customers. You come back, some kid took your tags and threw them all over the place. You got to reprint them. It's just a hassle, right? I can only imagine the logistics and everything of doing that. However, that's why I think this lawsuit's going to happen. But Dollar General being a big Fortune 500 company, they're probably going to settle this out of court and move on with their life. Because right now, even though this is in the court still and is still being pursued. It has not affected their price in the long term so far. So if I share this and I go to the year tab, you can see that it happened right around here in the end of December, beginning of January, and we have been holding steady. Now, if it comes out that this was a malicious pricing, then Dollar General might see a good 20% drop on their price just because people lose faith in the company and everything like that. However, it still is a long-term effect because as we are entering into stagnation instead of inflation, it's just we're just going to have stagnation where no jobs, no job growth, no innovation growth, but people have jobs and just kind of moving on day to day, right? This is going to become a staple as people are trying to cut costs wherever they can, and it is appealing to get a $2 pack of chicken from them. Not gonna lie, that's if you're spending $8 somewhere else and you can come here and spend $2 for the same thing, people are going to do it. Now there has been talk down the in other areas of culture about Dollar General is giving out lack of nutritional food, so it's kind of like giving high fats, high sodium, high sugar content food because it's cheap, it's easy to produce, and easy to get out, and it can be preserved for a long time because they do a lot of like ramen noodles, instant noodles, in like pre-processed foods and things like that. Now, where they're trying to change their image is on the Dollar General market, the GG market, which is trying to get fresh fruits, fresh vegetables, and all that stuff. But that is also incurring higher costs, and we can kind of see that if we take a look at the financials. Um, I just gotta get down here. As you can see here, they really started implementing that during 2022 with the DG markets, and you can start to see like their profit margin and gross income growth started to decrease, right? And you can see here you're finally starting to see lower margins. So for a lot of you who don't know, the margins on this business have been closer to like 40%, especially if you compare it from recession to recession, because last recession they were like 40, 45%. They were going gangbusters in 2008, 9, and 10. Now we're kind of getting back to that, but they're not making the same 40, 45% margins because they're operating on a different playing field. Now it doesn't have it recorded, but if you went back, you'd see like 38, 30, I think it was 38, 33, 35, and now we're at 30. And this is because of the switch to fresh foods. Now, fresh foods has a lot of maintenance behind it, which you got to uphold. So, with that being said, with that being said, um, you're going to incur more shrink, more cost. You got to rotate product. There's more food serve safe standards that you got to meet. You got more audits with the food serve administrations of the states. So this is a tricky endeavor to try to remain cost effective for consumers while being cost effective for yourself. However, they seem to be trying to do it with 30% margin. And you guys got to remember, 30% is still great. Most businesses, especially retail businesses, operate off of 10, 11, 15%. So 30% I think is overall good. The only thing I say that's, you know, is going to be lacking is where you see here they have pre-tax income growth is down. They have all this other stuff is coming down. Net income growth is down, but you don't need, when you're going 1.7 billion, 2.6, 2.4, 2.4 again, and then 1.6 last year, 1.6 billion, they're back to where they were. So I still think they're overall a healthy company. It's just that they're going by growth standards. What you got to do is go by overall margins, and their actual margin is very profitable for any business. Like in my businesses, I would take 30% end of the day profit any day of the week before taxes. What people, unfortunately, Wall Street and everybody is growth mindset rather than earnings mindset, and they're constantly wanting it to grow, grow, grow. Well, The growth era, the last 3 years, they're over and done with. So 2023 should have been a decline, like 99% of businesses out there. And then this year should be stagnation because they shouldn't be growing too much, nor should they be declining too much. They just should be like going up or down a little bit. Now, in the long term, Dollar General is going to be a huge stay. Now, they are closing out in big cities, but their bread and butter is the countrysides. Those stores make way more money. I actually talked to someone I knew that used to be a store manager at a Dollar General, and some of those rents that they were paying, like the where he was out in the middle of nowhere, and his rent was $1,800 a month. $1,800 a month. Your cost of payroll is like $8,000 because there's only three of you. $8,000 a month, and that store is making $20,000 to $30,000 a week. Yeah, that 30% starting to look really, really good. So you guys got to remember 30% means every dollar that comes in, they get to pocket 30 cents of it. Now, for my businesses, I get to pocket 15 cents per every dollar, which is, I think, very good. And after taxes and everything, kind of comes out to like 7 cents on every dollar, which is still good. So I can imagine taxes for them, a lot of deferred taxes, a lot of new openings and stuff like that. They are probably pocketing about 20%. So 20 cents on every dollar, which is phenomenal for anything food or retail wise. But overall, long term, it's definitely going to do well. I do see it going down, possibly getting closer to 100, depending on how this case goes. It could be very negative impact if the price manipulation was done intentionally, or if it was just because staff is underworked and they're short staff all the time and they just can't get the price changes done. Which unfortunately, it's not because like not every state, like some states can allow you not to have a price on it, but most states require you to have the price posted where the product is. And this isn't a case of people switching around products. It's like people go in with like full cartloads expecting 200 and end up leaving at like 240 and not understanding why. That's because all those little 50 cents here, $1 here, $2 here start to really add up. I hope it's just like employees being too overworked to maintain the price efficiencies and making sure everything's priced right. And I hope it's not something malicious. But given the scenarios in real world, it's still a strong possibility that it was done intentionally with the intent to grab more money than anticipated. So just leaving that out there. So just keep that in mind. That's a big worry. I rate this as a rating of B. So not a strong A, but it is something. It's on my watch list. I'm waiting to see if I want to put money into it to put into my portfolio. So just keep that in mind. I'm just kind of letting it sit on the sidelines. I do want it to go down. I do think we're at the peak of the market anyway, and I think everything's going to go down anyway, just because we have to have a downturn in the market, period. So just keep that in mind. Don't go moonshoting this. This is not something to moonshot. But as a long-term investment where you want to make it like 2 to 3 or 5% of your portfolio, it is a good decision and a good thing to dollar cost average through as you're building your own personal stock portfolio as you go. But as always, before you start building your own stock picks, make sure you're investing in the proper funds. Make sure your 401k is well funded. Make sure your savings account is well funded. Make sure everything is well funded before you start making your own stock pick portfolio. But really appreciate you guys. I know it's a short video, but there's not really a lot of information. It's just that they are priced right. Dollar stores do make a lot of money in recession times. They got to overcome this lawsuit, whether positive or negative. It's got to happen. It's got to come to a close. We can find the real price after that. And then we got to see what their plan is for the future, which it seems like their plan is to do the DG markets and go to more rural areas where they can pay less on rent, keep payroll low, but keep volume pretty consistent. Because you can make 30% off of dozens of stores making $600,000 a year. That's better than trying to make 5% off of dozens of stores making $1 million plus revenue. Remember, top end revenue being as high as possible is not the key. It's just making sure you're making a lot of profit on every dollar that you're bringing in. But with that said, guys, I'm going to sign off for tonight. Thank you, guys. Stay tuned for another stock pick episode. And as always, these videos are supported by you guys hitting that like and subscribe button. So thank you, and we'll see you next time.